Hi, this is Randy Finney with Right Side of the Chart, and this is a mid to latest session update. Might be my last of the day before I cut out for the weekend. For of course, Friday, July 19th, 2024. It's 2:37 p.m. Eastern Time as I'm starting the video, and I'm going to go over some important levels and just give you my thoughts before we wrap trading up for the week. All right, so as you know, forever and a day, I've been pointing out these big, various market conditions, overbought conditions, negative divergences, breadth deterioration, and et cetera, et cetera, et cetera. Put call extremes, bullish sentiment, and talking about where we're probably going in the long term. And so obviously every day that we go higher, every day we, get, especially once we start getting sell signals, which we've gotten lately, it increases the odds. And that is including but not limited to the bearish engulfing candles on QQQ, NVIDIA, and the semis. The trend line breaks, the initial trend line breaks, the fact we went up, almost to the very top of my market top range there, et cetera, et cetera, et cetera. But what I'm going to do right now is just give you the facts. That's what I do. I give you analysis and tell you that it appears imminent. And I think the turn has come. But so far, again, as I said yesterday, relatively we're not down that much. The NASDAQ is down high to low, not even 6%. The NASDAQ 100, that is. In the S&P, less than that. I'll get to that in 1 second. I'm going to take this line right here, and the common theme I'm going to leave you with, unless there's something crazy in the last hour of trading today, and I don't really foresee, a huge slide or, even a big rally up, we're going to close right on some pretty key support levels. And again, we're getting to the point, as I said in that last update. I'm going to get to VTI and SPY in a second. That we hit some major support levels, although QQQ is broken down, and that is the most important in my opinion. What I'm going to do in this video, and I'll keep it relatively brief, I'm going to go over the most important indexes, which are the NASDAQ 100, to me, the S&P 500, and then, every now and then I include VTI. There is no better ETF out there for the stock market. Everybody, people always say, hey, what did the stock market do today? Or the news will cover what the stock market did today. Well, what is the stock market? The stock market, the closest thing it is to, as I've said a long time, is the Wilshire 5000, which is basically what VTI is replicating, the old Wilshire 5000. The stock market is not the Dow Jones, not even remotely close to the stock market. For 100 plus years, that's been considered the market. But that's just 30 stocks, 30 industrial companies. S&P 500, yeah, much more diversified 500, but they're not at all indicative of the stock market because it's the 500 largest publicly traded companies in the U.S. NASDAQ 100, you got 100, but they're mostly tech companies. So but we're going to go over everything, and we're going to go over the leaders because the leaders matter. Those big Mag 7, whatever you want to call them, as I've said, they took the market up to where it is. They will be the ones that take the market down when we have the next big move down. Again, this is nothing more than a correction, maybe a great buying opportunity. I'm going to go over those levels again. And the takeaway, I'll say it right now, I'll tell you what I'm doing. Not going to go crazy anything into the weekend positioned equity wise because we are poised to close at some pretty key support levels. Again, the market looks like it has that little nudge. You just need to push it over, and we can go down and hit these deeper targets that I've given you now for a while, including the 200 days that I've been calling for a pullback to the 200 days for a while. I still think that's going to happen very soon. Could happen next week, but it could happen another month or 2 months from now. All right, so the levels that we're going to cover right now, I'm going to show you. This is a daily chart. There was that bearish rising wedge, a bearish engulfing candle, but I just tweaked that line I had on here down to about 473.50. It's more accurate. It captures that recent reaction low, and there's a gap right there and all that. So you're kind of clinging to support. You have the 50-day moving average. QQQ is dipping below that trend line as it is on the 60-minute chart that I've covered. This is that secondary longer-term trend line off the April lows right there, which I'd been targeting, and it was hit. I had a high degree of confidence even back here it would be hit. It has been hit, and we're actually below it. So that is that. However, the QQQ is, again, very far from the stock market. It's a great trading vehicle, but it's not the stock market. So we go back to SPY. There's the 60-minute chart. Remember yesterday I told you we hit that 550.18. We hit the trend line on the futures, but we didn't hit it on the actual ETF. And a lot of folks trade this. Even institutional traders will trade the SPY. And so you have SPY at key trend line support. And I know I'm very repetitive, but these things are very important. These are lessons I've learned over the years. Support is support until unless broken. So you have the markets right now. The S&P 500, I'm going to show you the market leading stocks as well. VTI at key support. They are support levels that I do think are going to break, and I do think those breakdowns are imminent. Imminent could be next week. And there's a good chance, and I'd put pretty good odds. However, they may have, like I said earlier, one last hurrah. All I can tell you definitively, I give you my opinion on what's going to happen, and I can tell you facts. The facts are we're at support. There it is, guys. And again, a lot of bearish evidence to say that support level will go. But when you go home long or short today, you've got to worry about, especially if you're an ETF trader, futures, they're still not going to open up again until Sunday evening. And then, of course, the ETFs are going to open up on Monday morning. So you got to have 2 extra days overnight risk there. Longer term, we've had enough sell signals that I do maintain anyone's position swing and trend short for the signals we have. And I have some of those positions in long-term accounts. I wouldn't even think about, covering those. I would just hold off till next week or whenever we get those next sell signals to add and bring that to even a more aggressive position. If you're more of an active trader, you've got to decide what to do today. So there it is, SPY at support on the 60-minute chart, also on the daily. These are your longer term targets. Again, I think they'll be hit. I think we'll break down soon. But this is the trend line coming off the October 2023 lows right there, this yellow trend line. I know this is a busy board. I'm going to draw it for you right there. We're right on. That's the same one I showed you on the 60. On the 60, it comes off the April lows, right? This is the one I've been covering with you for a while here. But if you extend this to the left, I'm not going to do it. It's a 60-minute chart. I can do it here. I'll extend it to the left. Edit, extend trend line, and that's the trend line that comes in off those off the lows right there in October. So a very important index, one that many traders watch, even if they're not trading and if they're trading QQQ. So there's a good chance the buyers could step in here. And again, you're probably not going to know until Monday. They could come close, rocket up into the close. They could even dip it a hair below today. But again, if you have to squint to see a breakdown, if it's not a big red stick right through there at the end of the day, this is just going to be continued on Monday morning. All right. So that's SPY for you. And then VTI, as I said, I give you a description of what it is. That one is also nice and clean. This is, again, the October 2023 lows. You've got a lot of clean, distinct reactions. That is a super valid and very significant trend line. We are on it right now. This is the first day we've fallen to it, along with SPY falling to the comparable trend line for the first day. And is it a trend line I think will be broken based on everything I've covered for weeks and months now? Yes. Can it happen soon? Yes. Today, maybe Monday, possibly. Next week, likely. However, we may get that one last hurrah. So again, trading's all about risk management. You can always, if you're going to lighten up before the close, hedge up, whatever you want to do, you can always remove those hedges or increase your position size, be it long or short. You want to go long here with a stop below? That's objective. In fact, that's the only objective trade to be made right now, other than covering shorts. If you swung it down on our recent sell signals on the shorter term charts, you can cover some shorts, book profits because you're at support. That's what you do, TA 101. You cover short trades at support, or if you're bearish, you wait for that support level to break to short if you're bearish. If you are bullish, you buy a pullback to support with stops below. Now, being long, as I mentioned, it's picking up nickels in front of a steamroller, but that's it. We're at that support, so I still think there's a chance they could buy it up into the close or pop it up on Monday, or we gap down. Again, it's kind of it's certainly, I usually try to assign probabilities to what's going to happen. I'm going to say close to coin toss, so let's just leave it at that. Whether we break down, gap down on Monday and run, or have one last hurrah, we'll see. Maybe the end of the trading session today. There's not much time left in the session. We've got an hour to do it, and see if we hit those bounce targets I gave you earlier. All right, so that's VTI. I already gave you SPY and QQQ. We'll go to the market leaders. Before I leave that, the other index that I told you that I have, I shifted over and started heavily shorting the other day is the small caps, and I gave you targets on the 60-minute charts. I gave you these gaps during the video, and then swing target down here. We hit that one yesterday, and now we're below it. So it's been, like I said, I said yesterday, the day before, that I expected the small caps to actually, kind of start to play a game of catch up to the bigger caps, the tech stocks and all that. And it's been a nice drop, 2 days. If you shorted it the other day, you're already up just a couple days, 5%. And again, I talked about that, it's the nature of a parabolic top. When you get parabolic tops, the turn doesn't come like this. I've rarely seen that. The turn, parabolic up, parabolic down, right? Or, vertically up, vertically down is usually what you see. All right. Oh, and we are coming up to, there's some support right here, but either way, to be continued next week. I still think the small caps have most likely peaked. Still love the regional banks as a short, and they're obviously, big cause of the rally up there. And I'll tell you, they're actually overall, some of them are taking on the chin today, but the KRE is holding up really well, relatively well. But let me get to, I want to cover the market leaders and make this video short so I can get it out to you. Okay, so we're back on a daily time frame. We're just going to cover the big tech stocks. Apple, not much here, but remember, I'm going to toggle back and forth between daily and weekly. Unless we get a big stick stay before the close, we are going to get that bearish engulfing candle that one of our members pointed out yesterday. But we're also going to close. You can see the way I have the weekly uptrend line drawn right on that trend line there. So Apple is still above support on the more significant weekly. This is what it looks like. Remember this one? I highlighted this one forever and a day. We kept going up, 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 up. Up. I knew it was going to break, and then finally, when it broke, that's what a breakdown looks like, guys. That's a solid sell signal, and this was months. Remember, this is a weekly chart. Every candle is 1 week trading, so you're talking several months from all the way from late July into early November before it bottomed in a double-digit drop. So that's what will significantly increase the odds my deeper long-term swing targets are going to be hit. But as of now, it's another stock, at least on the weekly, at support. On daily, you've got this other trend line right here. Microsoft, I know, apologize, busy board here. I'll turn off all the lines and replicate it for you just so you can see the trend line that I was focusing on. January 2023 lows, beautiful uptrend line. Microsoft is poised to close on this. So this is another extremely important stock for the market. And so you just can't get balls to the wall bearish with Microsoft and some others still at support. So yes, there's been some shorter term breakdowns as I've highlighted recently, and that's what got us short, 60-minute trend line breaks and all that, these short term trend lines. But now you're at, and you're at price support too. Look at this. This was the recent high, divergent high, rallied again, boom, 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 breakout candle right there. So simply, this is just a breakout to new all-time highs and a back test, dual support levels, price and trend line. Now this cuts both ways. So yeah, the buyers could and should, and quote unquote, should step in here. And I think there's, like I said, coin toss odds, good chance they will. But if they don't, boom, we're going to take that out and we're going to visit the 200-day moving averages and my target down here at 397. Still, think there's a decent shot at that one last hurrah. And like I said, I'll say it again, support is support until unless broken. So you either buy this support or you wait for it to break before doing anything crazy. NVIDIA, I've covered NVIDIA ad nauseum, but about 11/17/76 on the daily. It's just beautiful. That's, remember, on the 60-minute chart, that's my first target zone. And I have a deeper targets on the daily. Once that level goes, and I think it will, we go down here, 107, then we go to 96 in that uptrend line. And then at that point, might be a nice long entry on the video. We'll see what everything else looks like if and when it gets there. From a weekly chart perspective, we've taken out. See, this is very comparable to the uptrend line in Apple. Comes off the April lows. And you don't have to squint to see if this one's broken down or not. That's a big red impulsive candle. That's a sell signal on, to me, what's one of the most important stocks out there. And you know my long-term targets. Gave those to you back. It's been almost a month now, 3 weeks ago. Okay, next up, Alphabet. We're on a weekly time frame. I'll toggle back to the daily, but clearly broken down on that this uptrend line off the April lows. So there's a sell signal on the weekly, and however on the daily you are at support. So you've got different subsets of traders, and I try to see everything. I try to see what the bulls see. I try to see what the bears see. I try to look at it with unbiased goggles, or lens. And you do have this trend line right there off the late February lows, bearish rising wedge, textbook breakdown. We're just at the first support level where we'll probably see some buyers step in. And if they don't, again, it's just like I said, these are important support levels. If the buyers are just MIA here, we just slice on down through there next week, close on them today or on around them. But then go down through there, it just shows you a tremendous shift in the supply-demand dynamics, meaning there's just no buyers at these levels where forever and a day there's been a voracious bid of buyers. So it just means the buyers have left the building, that's all. And then that's what trading's all about. It's economics 101, supply and demand. You have more supply, meaning stock, shares out there, or more demand for stock, more buyers and sellers, stocks are going to go up. When you have more sellers and buyers, stocks are going to go down. So, again, I'm just telling you very near term, days, hours to days, there's a decent chance we could get one last bounce. You asked me where we're going weeks to months, and I haven't wavered on that. Those are we're going down. So what I do, Randy, well, I just told you, it's risk management. You don't go crazy long or short this week. I don't. You do what you do, and I do what I do, but I wouldn't because of what I'm showing you in this video. However, that's kind of, for me, with my active trading account, I kind of get a little more heavily leveraged and all that. And then the other regular swing accounts and IRAs and other things like that I don't actively trade in. Yeah, we have some pretty good sell signals. I think it's makes sense to go home with a decent short exposure. But then of course also there's all kinds of other trade ideas out there that are hedged up. They're short on crude oil, which actually is at support now. If I get to it, I'll cover in this video. Crude, I just covered that short today. I should tell you that because I've been on that one for a while and it's been working out great, but we hit some pretty good support levels I'll get to in a second. I just want to finish this, all these market leaders. So that's your story on Alphabet. Amazon, clear breakdown. Again, you have a series of trend lines, this one being more significant, back off the January lows. Amazon and Apple, if I recall, my two top picks, uber bullish on those guys and long as all the FANGs said that the NASDAQ 100 would outperform, which it very much did. And now that's the same trend line right there off that lows where we're buying the big FANGs. And this one, it's a very important trend line in my opinion. It's a target that will be hit soon, especially now that this lesser trend line from October lows has been taken out. But a big wedge. This chart pattern projects down to, at minimum will come down here, hit that level soon, the 200-day moving averages, and ultimately we'll take them out, I believe. But so I just want to say this one has a solid check mark. It's not even at support on the weekly, so that again makes it certainly, I can't make a strong case to buy this support level. I can make a case to buy it, just not a strong case. Hopefully that makes sense. But there it is on the daily. I put a line here at about 180, 175 because you have some reaction lows there. You've danced around that level. It's what I call mild support, not solid support. This is a better support here, about 174 and change, and the uptrend line's even better support. And this yellow trend line is very significant and important support. Levels that I think will hit soon, and levels that if we get a little more downside next week or in the next week or two, maybe this is where the first tradable bounce comes from if we get down to these other levels here. And you get the 200 days. This is just massive. This is almost a magnet at this point in time that I think will be hit, and it's a level where I'll most likely be going long Amazon and or some other stocks if and when we get there. So, but as of now, that's kind of the state of Amazon. Breakdown this week at mild support now, where this is a crowd favorite. They're going to look to buy it somewhere, and they're probably going to buy it here today, maybe today or Monday. Good chance. Meta, like I've told you, has taken out. I have alternative trend lines here. The yellow was really your primary, nice and very super clean up trend line. That one broke, as I mentioned back here, following that divergent high, gap down. We pushed up to make virtually an equal, ever so slightly marginal new high from the previous high. It simply extended the big negative divergence that had already been building up until that point here. And then I have put in this secondary trend line off that same point because we had a lot of reactions recently dancing on it, and then that broke down too. So we've had, multiple breakdowns. However, as I mentioned recently, this is a support level I've had on here for quite a while, 456.08. I created that actually back on June 28th. That one I may have added recently. Either way, I added it almost a month ago, and it's a pretty good support level. It's all these, when you gap up, top of a gap, that's always, especially a big gap, significant support. And then you gapped around, you have another gap there, and then you danced on it here. So you have a lot of recent reactions. We just kissed it the other day. Pavlov's dogs, as they do, stepped in and bought it. The dip buyers bought it. So you're going to close the weeks comfortably above that support. And when you break that support, that's going to be the next sell signal Meta. And then you got the 200 days. You got these price support levels I have here. Then you're going lower. As of now, in a nutshell, it's going to close the week above support on the daily, but having on this trend line here that I've drawn on the weekly, a solid weekly candlestick sell signal down below it. But that's that comparable 456. So it's kind of pinched between support now and resistance. So again, to me, it's just a matter of kind of leaning towards that little more upside, one last little hurrah, and then boom, then we take out the remaining or the next support levels soon, probably next week. All right. Tesla's doing exactly what I figured it would do. And that is parking itself right on or below the trend line like I called for. We were up there earlier in the week. Said this is our bear market downtrend line. And Tesla will most likely come back and close down on or below it. As of now, all the better. We're slated to close below it. So that gives me what I was looking for, a rejection. And even better, these were clean rejections off that bear market downtrend line. This one's even more bearish because it was an intra-week break, charged up the bulls. Actually, two, last week and this week. That means that skinny part, we got that high during the week, only to get smacked down by the end of the week back below and close back below the trend line. Tried it again, second failure. Who knows, maybe third time's a charm, but if we start moving away from here, that's going to have sucked in a lot of longs and blown out a lot of shorts, like I talked about, clearing out short interest, and so it has the potential to go down more. But let's not get too ahead of ourselves. As of now, all it is another test of the primary bear market downtrend line. It's not a hard rejection yet. I just wanted to point out we're going to close below there, so you certainly can't chalk it up as bullish, at least from analyzing on this time frame, what's going on in the weekly chart. And on the daily, it's a little different on the daily. The way it's my trend line's just as clean. I have it right at all the tops of all these candles. There's one there. However, it is a breakout and a back test. It just happens the weekly and the daily candles form a little different. And so that's why I'm not writing this off yet, because right now it's a back. Now we're going to close on it. So this is not a breakout. This was a breakout, that a breakout is being back tested. So I'm not going to say the breakout's failed yet until we clearly move back down below here and start moving lower. Just kind of leaving it, if you will, a question mark, if you will, for Tesla to be continued again next week. So that's it in a nutshell. That's what I'm trying to convey to you guys, is that the case for a bounce is still there very much. And we could rip into the close today if the machines decide if there's enough dry powder in this market and they want to buy these dips before the weekend. And we could hit some of those bounce targets I gave you earlier. And depending on how high we get, that may be a time to get back short. Again, you decide. And if you don't know what to do, and I know there are a lot of you that don't, I get the questions, go to cash. You don't, it's like when I said this the other day, I don't go to Vegas. I'm not a big gambler at the casinos because I know the odds are against me. So if you don't have favorable odds, you don't have to, trading's not binary. You don't have to be long or short QQQ or long or short Tesla at any point in time. there's a third option that's no position. And so you close it out, see where the cards fall next week, and then you can always get back in. So that's more proper risk management than trying to take big swings. So there it is. It's kind of the story of the market, the market leaders, depending on what time frame you're looking at. Yeah, we've gotten some pretty decent sell signals lately, but on the flip side, the current trend, overall primary trend is bullish, and a lot of those stocks have just had their biggest corrections in quite a while. They're at support right now, and there is still a very decent chance the buyers can come in and buy these levels at support and either kick a rally that kicks off late, in the day today, and or early next week. But if not, we're right on those support levels, so there's not a lot of downside left. If we go much lower, the next support levels are broken, and then that can open the door to the next downside targets. All right, so I mentioned crude oil. I'll wrap up there. It's been a very nice trade for me recently, and highlighting it is also before the funny thing was a hedge, being short. Now I'm long at the moment, still down on those, but giving them just a little more rope to today, and told you I'll just lighten up by the close. But USO has this potential divergence here on the 60-minute chart. I've got its support as around, and remember, USO is an ETF or ETN that does its best job that it can to track crude oil futures. So I'm going to show you crude futures in a second, but about 78.34 or so is support. We're right there, almost divergence on the daily. Like I said, we rallied up. We've now entered back into this yellow zone here. But let me show you futures, crude futures. Okay, this is a 2-hour candlestick chart, so it goes back 6 months. You can see that divergent high followed by a big correction, divergent low followed by a nice rally. But you can see we had a lot of reactions here, 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 on here, here. So this is a support zone. We're at the lower end of that support zone. So again, it's me just wanting to lighten up for the weekend, but there's a decent support where maybe a slightest hair below it. If I go down to a 60-minute chart, we're on it right now. We're on that support zone. This is a 60-minute chart. Again, you can see all the reactions here that make that a support zone, and so that's it. So, and I think the last time I mentioned it yesterday, day before, was a push back up to either this downtrend line or right here. And so, initially shorted it here, then you had the break of that. Then I posted it was somewhere we had a bounce start. Was it? Yeah, it was crude. Bounce back to, I might have had a different chart. It might have been USO gap level and had another re-entry there. So it's been multiple entries pointed out. I'm just saying right now, I sheared enough meat off this bone. So covered that trade. Just want to let you know, and then I'll reassess it next week to see whether I want to get back in. I don't see a compelling reason to buy, but I don't see a compelling reason to stay short, especially heading into a weekend, because even these futures stop trading later today and won't pick back up until Sunday. All right, guys, that is the update, and we'll wrap it up here, and let's see what happens. I don't expect any fireworks today. Monday, I would not be surprised to see a pretty big gap down, and I wouldn't be surprised to see a pretty big gap up either. It could go either way. Maybe there'll be some news headlines over the weekend that determine which way it goes, but all I can tell you again is that we've had quite a few sell signals. There's a lot of evidence that in the coming weeks to months we're going lower. So if you want to position that way, that's fine. I've got some stuff for that. But in the near term, coin toss odds, and that's not a great, those aren't great odds. If you're a betting man or woman, you want to, bet favorable odds. And so that's my take for what we're going to do over the weekend and into next week. All righty, this has been Randy Finney with Right Side of the Chart. Have a great day or a great weekend.